This is our Forex blog for February 7th, 2011. And one of the first things we do each day is see which currencies are strong or weak longer term. Underneath each individual currency, the dollar, the yen, which are the two major ones we trade the bottom ones against, you can see the daily statistical strength, weekly, and monthly. So if a currency is extremely weak like the yen is, and you see some real-time weakness at or above the dotted white 80 line, especially when it confirms the longer-term trend, you want to trade one of the stronger pairs against it. The Australian was one of the stronger pairs, the pound was one of the stronger pairs, and also the CAD. So either all three of these, starting Sunday when the yen was weak, and it was weaker than the dollar. The dollar had a daily trend that was up until about a couple hours before midnight. You want to trade one of the bottom currencies against it. So let's start with the pound yen. Last night, pound is strong, the yen is weak. We have some narrow range patterns right here. You might have got into a trade and lost, got into another breakout, and then this thing just kept going up. You would have made about 70 or 80 pips on there. Notice not off the charts statistical strength, and the pound's been up quite a few days in a row and against most other pairs. The extreme strength it had before wasn't there today, and it's above our upper containment band. Currencies usually don't break out and stay above the outer bands if they don't have incredible momentum. So the pound was stronger than most pairs and the yen was weaker than most, however not off the charts compared to the past statistics that we use. Anytime you do see a higher high though, usually you can try to buy the next pullback. Previous month's high pulls back, you go long here. You might have made 10 or 15 pips on that. This is a very strong currency, so you really wouldn't want to look to sell it, but when it comes down to the hourly, it's not able to go underneath it. You might have got into a buy right here and probably lost a few pips on it that way. Remember, the Australian was also very, very strong, so you could have also bought the Australian yen last night. This one pulls back to the hourly and it's kind of consolidating here. You might have bought, wouldn't have made much on that trade. It finally breaks out here. You might have got in and got out at this resistance area right here, only made 10 pips. When the hourly moving average gets hit and it doesn't break it, you might have got into that trade there and made 10. And when it breaks underneath the hourly, you got to be prepared for a possible reversal down, but it goes right back above the hourly, goes sideways. This is a perfect sideways rectangle breakout, and you get in. You're hoping it goes up, hits the Fibonacci profit target up here, but it doesn't, stalls out. And guess what? Look down here. There's not a lot of incredible momentum. If you see big moves with incredible spikes of intensity, usually there's a continuation move, sometimes only 5 or 10 pips, and other times 50 to 150 pips. You just never know. You get in, and if the trade takes off, you hang with it and you have a big profit. If it doesn't, you usually have a small loss, break even, or small 5 to 15 pip win. The last one that was strong was the CAD, so strong CAD, weak yen. This one's also up near the 200-day moving average, major resistance right here. When it finally breaks above here, you might have got into a trade. I would have got out just because it went sideways with very tiny 6 or 7 pip loss. Broke out again, I would have went long, and it went up to the upper containment band without that much momentum, unfortunately. Sometimes when currencies are up too much, they don't really take off, upon a breakout, but usually you can wait for a fib move down, wait for a counter trend move, get in at the first or second fib target, and you got a nice little 20 pip move there. That's called our Elliott two-wave fib pullback in the direction of some of the strongest trends. The currency meter shows the CAD very strong and the yen weak, and on pretty lousy trading days like today, that's pretty much what you got. Now the Swiss was also weak, so you could have traded the Australian Swiss, pound Swiss, and even CAD Swiss today. Let's look at those. Australian Swiss. Now this is underneath the hourly, so you don't really want to look for buys underneath there. You want to wait for it to come back above the hourly right here. You might have gone long right here at 81. You got all kinds of resistance up here at 10, and you made about 30 pips. Now again, notice there's not a whole lot of statistical real-time momentum. The longer term trend is super strong, but there's no real-time momentum like you saw before. Usually these extreme moves continue. So if you would have bought that next pullback when it found support at the hourly, maybe you made 10 or 20 here, and until it breaks above the resistance area here, you don't really want to buy. I might have got sucked into this trade right here, and I would have lost. I would have lost 10 pips on that. And it came back down to the hourly again with a little bit more weakness than before, However, it found support at the hourly, which oftentimes, the strongest currencies do. Good place to buy right at the hourly, right here and right here, and maybe you made 10 or 15 or 20 pips on that trade. When it broke above here, I would have been very hopeful, but then it came back in underneath this support area here, and you would have had to get out of your trade with a small profit. Pound Swiss. Again, super strong pound, weak Swiss. This one's above the hourly and it's kind of consolidating. I don't really see anything on Sunday night. I usually don't trade, but starting the day off when it came up, made a higher high, pulled back, didn't go underneath this low. Certainly was higher than this low and broke out. This is your first profit target. This is your second, and this one just took off. And notice the incredible momentum here. Anytime you see that, usually we call it the trend explosion system. You wait for a pullback, you get in, and you might have made 25 to 35 pips on that next move up. Notice it is above the upper containment band and therefore more statistically likely to reverse and continue, and the momentum was half of what it was before. So you take your 25 to 35 pips on that one. The first one, they just kept going and going. Trend reversal triangle right here. The first sign of this stalling, I would have got out. I probably would have got out up here at 75. That trade, 75 pip profit followed by about a 25 pip one. And usually when currencies have exploded too much, usually they have a pretty decent pullback. The first move down, you wait for the first or second fib target to get hit, and then you look to get in. And this one shot right through both of them, so I probably would have avoided getting into that trade. But the double bottom right here with less weakness than before, I probably would have taken that trade and maybe made 5 to 15 pips on it. Wasn't a very exciting trade. The CAD is the third of the strongest ones. CAD Swiss. This one also went sideways for quite a while. Monthly R2 pivot level, and then broke out. This is a perfect example of a sideways rectangle pattern. The minimum time for sideways rectangles for a short-term scalp would be 20 to 30 minutes. For a move, if you're looking to get a 20 to 50 pip move, wait 2 or 3 hours. And this one pretty much went sideways for 1, 2, 3, 4, 5.5 hours, and in even a tighter range for the last 3 hours. And then it broke out here. This would have been your first profit target. This would have been your second one, and the market exploded up there because it didn't take out the previous high of Friday. You might have been a little careful buying this pullback. Notice the pullback had as much weakness on the way down as strength on the way up, and it never hit our dotted 20 line, showing pretty decent strength but not off the charts strength. And if you would have bought this pullback and it went up with almost no strength, you might have got out of it. Looking to buy the hourly is always a good idea if the longer term trend's up, and if it's coming down to that level without that much weakness, you can see a little bit less than before. You might have made 20 to 25 pips on that trade. If you got in here, you probably would have broke even or lost a few pips. When it took off here, you got in hoping for it to break out, and it never did. That's just the way the markets are. Today was a pretty lousy trading day in most of the pairs. However, if you focused on the most high probability trades where the daily, weekly, and monthly trend all line up, you could have eked out decent trades today in an overall pretty dead day.